Hi, welcome to this edition of the Russell Investment Masterclass. I'm Scott Fletcher, Investment Specialist with Russell's Intermediaries team in Sydney. With me today is Kathy Cave, Portfolio Manager of the Russell Australian Shares Fund. Kathy, welcome to you.
Thanks, Scott.
We commenced our Masterclass series by looking at the key drivers of total investment return. When we drill down on the Australian equities sector, what do you think are the key drivers in your portfolios and what sort of factors are you looking to capture?
My key priority is to find the best managers. And to do that really well, I need to have a disciplined process, and I also need a team of people to help me. So at Russell, I have two very well qualified, experienced research analysts that help me work through the universe of about 130 Australian equity managers to find the absolute best managers. Having found those managers, then my role is to combine those managers in an optimal way. That means finding out what is special and unique about those managers and taking that into account when I combine them into a fund to give an optimal outcome to the clients. The second part of the process that's important is the implementation side of things, and we've put a lot of emphasis on that in the last couple of years.
Sure. We're now in the third year of recovery from the GFC, and it's quite a very volatile environment. What do you think are the types of industries, sectors, tilts, value styles that favour the current market environment?
My fund is mostly focused on picking stocks. That's the main source of value add that we bring. But we're very cognizant of the fact that there are some very significant macro factors out there that are important and playing an important role in the total fund. At the moment, one of the key drivers is really what's happening in terms of the resources boom, driven primarily by China, but other emerging markets just requiring a lot of resources. So we've seen, for example, in the small cap resources area, some companies have spectacular returns. Sometimes they haven't even got the resource out of the ground, but they've done fantastically well in terms of share price performance. Until more recently, when that volatility has come into the market, people have reevaluated and some of those shares have come off quite sharply recently. So small caps is a good area to be thinking about, but that will always be much more volatile than the rest of the market. So probably not a good place to be at the moment. And if you are going to go there, really do your homework very, very well. In terms of the fund that I manage, the Russell Australian Share Fund, we do have a slight value bias in that fund. That value bias has not come through in terms of returns at this stage. We expect over the longer term that it would. But at the moment, we're really trimming back on some of the value stocks because of the uncertainty. So some of the media stocks, some of the retail stocks, we're trimming back a little bit.
And obviously the investment management industry never stands still, and fund managers are often looking for ways to enhance what they do. How do you incorporate innovation into the Russell Australian Shares Fund?
Yes, Scott, one of the things we've realised in the last couple of years is people want different things from Australian equities. So during the 2008, when markets fell so significantly, a lot of funds didn't distribute any income. So we realised, and some clients realised, that that was very important for them. So we've launched a fund that's focused specifically on generating consistent income. Tax is also another area that's much more important. So we've launched a fund which is specifically focused on 15% tax rate investors. So self-managed super funds, an ideal place to put your money. And then within my own fund, the Australian Share Fund, we actually have about 16% of that portfolio allocated to a strategy that is aimed at getting lower turnover and therefore lower costs in totality. And we also have just under 10% allocated to best ideas concentrated portfolio, just buying the stocks that our managers like the most.
Okay. Well, Kathy, thanks very much for joining us today, and thank you for watching. We look forward to seeing you at our next Russell Investments Masterclass.